So without any further ado, let me quickly introduce to our first speaker, Albert. Albert is a great friend of mine, and he's a chartered accountant based in Melbourne. For over 30 years, Albert Gigl established MW Partners in 2005 as a specialist dental accounting firm. Albert and his team of dental specialist accountants handle a wide range of matters that affects dentists on a daily basis, such as taxation strategies, appropriate use of companies, and trust. He also enjoys working with motivated dentists and medical supply specialists who wish to make the most of their professional opportunities by helping them to understand the financial side of dentistry. So on that note, let's welcome Albert. I would have to be 1.5 meter distance here, guys. Let's put the hands together to welcome Albert. Good day, mate. Great to have you. Yep. So let's get started. So the screen is right there.
Okay. We're good. Look, welcome everybody. How do I get that to move? I did that. We're good. Okay, so I'm going to talk about the stimulus package, the cash boost, the $20,000 to $100,000 amount. Also, the JobKeeper package. Now that's very, very topical, and I'll probably spend most of my time on that. Cash flow management and strategies to move forward. Then I'll be able to take some questions and also some questions at the end. With everything these days, we need to have a disclaimer. Now, everything as far as I'm aware was correct last night as I completed the slides, but something possibly has changed this morning. But it's always important that people get specific advice for their particular circumstances so that, you're getting exactly the right advice for you. So with the stimulus package, the cash boost part, which was the first part that was actually announced to try and get the economy moving, or at least get it through a hibernation period. The final figures are that it's a $20,000 to $100,000 tax-free amount from the government for those businesses that have sales of less than $50 million, which means that it should cover off most dental practices. To be eligible, you must be an employer. That means you must have paid wages, and wages that have had pay-as-you-go withholding or a tax withheld from the employee's wages. The business must have an ABN, and it must have lodged its 2019 tax return on or before the 12th of March, or lodged a BAS, a business activity statement, within the last 18 months. Now, there are circumstances where the ATO will exercise discretion. There may be businesses that haven't been going for 18 months, or even in my case, I've had one or two practices that were settled in February or March, and they won't have been due to lodge a BAS in that period. One of the things with this package is, as long as you're an employer, you don't need to show a downturn in your business. So you just need to meet the general requirements, and then you'll be able to apply for that boost. There are integrity measures that were introduced with this particular package, and those integrity measures also flow their way through all the other packages that the government's announced. They want to make sure that it's fair for everyone, and they will in fact look at anything that is artificial, that is not consistent with the way that you operated previously, where you're seen to be seeking to increase the amount that you would get under this cash boost. The amount that you receive is based on the business activity statement that you lodge in for March. So it's based on your March business activity statement, and the cash boost will be made after your business activity statement is lodged. So the sooner you lodge that BAS, the sooner you see your money. If your payroll is relatively small and you don't withhold a lot of pay-as-you-go withholding, then you'll be entitled to a minimum of $20,000. That gets split over 2 payments, stage 1 and stage 2. So you'll get $10,000 on or after the 28th of April, so maybe even today. And then the second stage is actually paid in 2 parts. One after you've lodged your June business activity statement, which will be July, and the second half you'll have in your September business activity statement, which will be the other half. If you've got more than that in wages, it'll be determined by the actual amount of pay-as-you-go withholding that is on your BAS. You've got a lot of pay-as-you-go withholding, it's actually capped at $50,000 for that quarter. If you're a larger employer, or you in fact pay your tax on wages on a monthly basis, then your cash boost will be calculated as 3 times your monthly BAS for the month of March rather than the whole quarter. So there may be some of you that in fact get a larger cash boost because it's a multiple of March rather than the 3 months added together for the quarter. Now the cash boost is not directly paid to you in cash. It's firstly credited against any pay-as-you-go withholding tax that's payable, any GST that's payable, and the residual then comes back to you as a credit. The tax office have announced that they will not offset any of that residual against prior period BASs. So you will in fact get that refund, even though you may still have some tax outstanding from your December BAS or prior periods. With the JobKeeper, now this is the one that everyone is to some extent stressing about to make sure that they can line up their eligible employees and everything else. It's really important to note that this is not a payment to the workers or the employees. This is a payment to eligible employers. It's their money, and it's based on reimbursing them for the wages that they've paid out. For the employer to get the $1,500, they must have an eligible employee that they have paid a minimum of $1,500 to. So it works that way. Again, the eligibility requirements are that the employer must have lodged a 2019 tax return or a business activity statement in the last 18 months. Again, those ones that have particular circumstances, ATO has got discretion for those circumstances. They haven't actually outlined what the rules are or what they're going to look at. I think they're going to look at it on a case-by-case basis. So you'll need to run through that with your accountant to make sure that it's covered off. The second bit is that they must have a 30% decrease in their projected GST income. So that's the revenue that goes onto your business activity statement. So that's what they're looking at for that particular employer. So if you're going to do that on a month-to-month basis, you can select any month from March through to September and compare that particular month back to the same month a year ago in 2019. So if March was down, you can compare that one. I think most dentists were still doing reasonably okay for most of the month of March. It's April, the current month, that has really hit them hard. So if April is the one that's down, that's the one that you select when you put your application into the ATO for JobKeeper and the comparison between the two. The ATO will be able to data match because they've got your business activity statement from last year. They're going to get one for this year. they'll be able to compare the two from a business point of view. Once the 30% test is satisfied, you do not need to retest. So once you've got it, once you're eligible, you won't lose it. You'll keep getting JobKeeper right through to September, but you must advise monthly what your income is. And this is related to the ATO being able to keep tabs on how things are actually running in the economy and what benefits they're getting from paying out the money on the JobKeeper program. You need to be able to register between 20th of April, which was last Monday, that you could get online. Now, unfortunately, when they originally came out, it was between the 20th of April and the 30th of April, which meant there was absolutely not enough time for the 800,000 million businesses that were likely to register or had shown eligibility to start with. So it's now been extended to the 31st of May. Provided you register by the 31st of May, so you've still got a whole month still to go, you will get back paid for right back to 30th of March. Okay. If you don't register by the 31st of May, register on the 1st of June or later, it is not progressive. Okay. So you can't backdate at whatever point in time you're at. You must register by the end of that fortnight in which you need to pay your JobKeeper payments. The employer is required to advise their employees that they have registered the business and that the business is eligible for JobKeeper. It is the employee's responsibility to provide a JobKeeper employee nomination notice signed and back to the employer to advise them that they are eligible. So the onus of proof is on the employee, not on the employer, to determine which employees are eligible. That means that those eligible employees, the ones who have signed the form, have said, we're not getting the payment from someone else. We meet all the criteria. If they are casual, so permanent part-time employees are covered. Casual are the ones that are difficult because they need to be employed on a consistent basis for more than 12 months. So as long as they meet that, that's perfectly fine. Need to be an Australian resident, and all of the testing points are effective the 1st of March 2020. You cannot claim a JobKeeper payment if you are on paid parental leave. If you're on maternity leave, you're not able to claim it. You can't claim two at the one time. And you also can't if, in fact, you are fully incapacitated and on workers' compensation insurance. You need to stay on workers' compensation insurance to get through. As an employer, you can make amendments and or corrections to your payroll up until the 26th of April, which was last Sunday, the end of the second fortnight. But you must ensure that you have paid the $1,500 minimum for each eligible employee by the 30th of April. So that's by tomorrow, to be able to get a JobKeeper payment back from the ATO in the next week or so. Employers are required to withhold tax as they normally would from either the wages they're paying their employees or the JobKeeper top-up amount that they are paying. And subsequently down the track, you will need to provide details of the employees to the ATO. This will most likely occur through the single touch payroll system. and there will be no other requirement. The ATO can, if you're paying your wages through single touch payroll or STP, then the ATO will know which employees have been paid. Now, the ones that looked like they were going to miss out at the start were ABN contracting dentists that work at a surgery. An ABN contracting dentist, whether they're on a service and facility agreement or not, either way, if they're an ABN contracting dentist, they're considered to be a sole trader. They apply for JobKeeper in their own name. So whether they're a company or a trust or an individual, most of them are individuals, contracting dentists can get JobKeeper. They do it by registering themselves. They don't have, I should say, a requirement to pay $1,500 to themselves to then get the $1,500 back from the tax office. Tax office will just pay that amount directly to them. And those dentists that operate through a company and trust, they actually run a dental surgery, but don't actually draw a salary or a wage, and don't draw a commission payment either, where they are just living off the profits or a distribution from that trust. They can also claim a single JobKeeper payment for themselves. Some tips. The easiest way that I've found to administer the JobKeeper package is to determine what the actual working arrangements are if JobKeeper was not being paid. So if you're employing them for 2 days a week and the other 3 days are leave without pay, then your payroll goes through on the basis that you pay 2 days work, and the example I've said $180, $360, and you'll pay that twice over the fortnight, so that's $720. You would then pay the other $780 as a bonus. Consider it like you would pay a bonus or an allowance, and that's the JobKeeper bit to top them up to $1,500. Don't go through and put in extra hours to make it up to $1,500 where they're hours that they did not work. And don't do the other bit, which is I'll just bump up the pay rate to triple their pay rate for the number of hours they're working, and that'll get over the $1,500. Keep the wages as though that's what they're actually working, and do the JobKeeper as a bonus. Those of you that are already looked at it and are using MYOB or Xero payroll type packages, they've already put into their updates a JobKeeper bonus type code, and that's where that extra payment goes. If an employee is stood down, it means that they do not work at all and they don't receive any salary or wage at all. They are just merely left on your books so that they can be recalled when you need them to work. I believe Dallas from Lakeside Lawyers will speak a little bit more on this down the track. There's a fair bit out there where employees to some extent are refusing to come to work, and each case is different. You need to have a look at what the circumstances are. Those employees that are stood down will then be a 100% JobKeeper bonus payment. So that's paid out to them first, and then you get fully reimbursed by the ATO. Along the lines of what you do pay them for the work they actually do, that will have super added to it. That will start to accumulate leave entitlements, that just balances out the system. Where they're getting JobKeeper, there's no requirement to pay superannuation on the JobKeeper part of the payment. You need to make sure you do pay that $1,500 minimum every fortnight, and the system is one in, all in. So all eligible employees need to be included in the JobKeeper system. One of the other things that I believe will be much easier for employers to manage is if they line up their pay period with the fortnightly pay period that JobKeeper runs. It started on Monday, the 30th of March. So, and ran through to the Sunday, the 12th of April. So if you pay fortnightly, I believe it would be much easier to line up your fortnights and have your start on a Monday and your finish on a Sunday, and make those payments. If you're weekly, do the same thing, make it a Monday to Sunday type weekly thing, and it'll be much easier over the next 6 months to be able to manage that, because you're going to have to do reconciliations every time you do a pay. From an admin point of view, much easier to do that. Cash flow considerations. Now we will have Kelly from Credible talking a little bit more from the bank's perspective on cash flow and borrowings and those type of things. So that'll be good a little later on. With working capital loans, now this is, everyone's calling it a $250,000 loan. It's not a $250,000 loan. It's up to $250,000. And rather than being unsecured, which would render a much higher rate from the bank's point of view, it's 50% government guaranteed. So it's semi-secure, so you should get a lower rate from the bank, and it comes with an initial 6-month repayment holiday. So the up to $250,000 is still subject to the bank's normal lending requirements. They need to ensure that the money they lend you, you're able to service after the 6 months is up, and that is actually being used to support your business through this crisis. So to date, I haven't seen any lending that's been anywhere above the $50,000 mark for our clients. So it's just something, don't believe that you've got a get out of jail free card and are able to instantly get the $250,000. It just doesn't work that way. So you need to speak to your bank to see what you need to secure. What you need to really consider is exactly what it is that you do need, and consider an overdraft or a line of credit potentially to fund the initial wages and JobKeeper payments that are coming up. Now, even small surgeries, because they often have DAs and the like that are part-time, it's quite common to find 8 or 10 employees through a small practice. There's 10 employees, that means a $15,000 fortnightly payout, which means it's $30,000 and potentially $45,000 before you actually get a dollar back from the ATO. So that needs to be factored in, and it's better to see the bank sooner rather than later and look at a line of credit to fund that. Also, meeting or virtually meeting, either with your accountant or talking directly to the bank, to consider other options. Before you do that, what you really need to know are, what are your fixed costs? What's likely to occur over the next 6, 12, 18 months with your business? Now, irrespective of how well you plan and what you believe your projections are going to be, they will be wrong, okay? There is no way that you can predict accurately. Things are moving so quickly. So don't try for perfection. Just try to be realistic with your assumptions on what you believe is going to happen with your business. Work out what those costs are, what it looks like on the other side, and then go and approach the bank. There are a number of things that they can do, such as what used to be called a sale and leaseback, which is where if you have some equipment that you own, that you don't have any loans over, you're not leasing, etc., you actually own that equipment, you can actually go back to the bank and sell it to them and rent it, hire purchase, or lease it back. So that gives you an instant cash injection at that time, and it puts those assets, a bit like you just bought them originally, under finance again. It's one way of getting a lower rate type loan over a period of time if that's what you need. Also consider going interest only. Look at a deferral of payments if that's going to work with you, or an equity, or look at an offset account that you might have. Now, the ATO are also looking at deferring, or your ability to defer an existing tax debt. Now, under their guidelines, that's a tax debt that arose on or after the 19th of January. So not your tax debt from 2 years ago that you still haven't paid off, but a recent tax debt that you may have, and they will fairly well give an instant deferral through to September of this year, so that you don't need to make any repayments, and then you can negotiate the payment after September. Prior period tax deferrals are subject to the tax office review. They have been extremely lenient, and understanding that people aren't in a position to make payments, they're usually being deferred through to September as well. The other bit is if you are paying installments of tax, pay-as-you-go installments, your quarterly installments during the year, they usually come up on your BASs, and the March installment that you're usually required to pay can be varied to nil, so that you don't need to pay it. And the tax office will also consider circumstances if you have paid your September and December installment from last year, that they can be varied to nil and the money refunded to you. What you need to be aware of is those installments are what you pay towards your 2020 tax liability. So if you do vary everything to nil, when it does come time to pay your tax for the 2020 year, that will be probably in April or May 2021. You will not have any credits towards it, so you'll be up for the full tax bill at that time. They're not wiping that tax debt. It's just you have no tax credit against that debt. So just consider whether that's something that you want, particularly if you think that's when you're really going to start to get a spurt along and get your business back to normal. The last thing you want is being lumbered with a large tax debt. Just lastly, there's also a mandatory code of conduct that's come out a couple of weeks ago with respect to negotiating a fair rent reduction or deferral for commercial tenancies between landlord and tenant. However, each state needs to enact its own legislation. So it's a state-by-state basis, and Dallas from Lakeside Lawyers will talk a little bit more on that down the track. Lastly now, strategies to move forward. A number of people are aware of these. I'll run through them fairly quickly. There's a wage subsidy for registered trainees of up to 50% of their wage, and it runs for 9 months. It starts 1st of January all the way through to 30th of September. So if you do have a trainee or apprentice and they're still on your books, you need to look at making that claim. The instant asset write-off that most people are aware of, they've been buying up over the last few years, was at $30,000. It's now at $150,000. And while most dentists would be fairly game to be going out spending $150,000 on a piece of dental equipment right now, so you'd be able to squeeze your CEREC in there potentially, there are certainly a number of dentists that were part way through refurbishing or updating their practice when COVID-19 hit. If the equipment was not installed and ready for use at the 12th of March, then you would be able to take advantage of that $150,000 write-off. Just check with your accountant, but that could be a big tax saving boost when you need it most. There's also accelerated depreciation, which is any plant and equipment that you buy for the practice, which is new, up to any value at all. So $1 million, fine, won't include a motor vehicle, unfortunately. You're able to get a 50%, a half instant write-off, and then the rest depreciated in the normal course of events. There's also access to $10,000 worth of super. Everyone's circumstances are different. You can get $10,000 before 30th of June, $10,000 after the 30th of June, but before 24th of September. The amount is tax-free, and you must be able to show that your working hours or wage has been reduced by 20% or more. In my opinion, this is, if you absolutely can't feed yourself, that you would go into this type of arrangement to withdraw money out of your super fund. Again, it's dependent on your circumstances. I've seen some emails and other things going or doing the rounds where people are saying, well, why don't we put $25,000 into super, get a tax deduction for it, and we're able to pull 10 grand out tax-free. That will absolutely, because your requirement to withdraw from super is, your application is through the ATO, they will absolutely be aware of your $25,000 contribution, and they'll either stop the $10,000 or you'll be hit with fraudulent activity or a scheme under the integrity measures. So don't even consider it. Take it for what it's worth. If you absolutely need the $10,000, take it out, but otherwise leave it alone. It's also a $10,000 grant. This is a grant, so it is not required to be repaid. It's under the normal grant circumstances. Most of the state governments are doing it. The one in Victoria is designed for non-essential businesses, like your pubs and your clubs and everything else that have been affected by COVID-19. And therefore, I believe the ADA have advised that, or the ADA in Victoria have advised that dentists in Victoria would not be eligible for that. Absolute applications closed 31st of May. You can make an application if you wish. You can go online, but just check out all the requirements before you proceed. Larger employers will get a full refund of payroll tax for the 2019-2020 year. So anything you've paid up to date will be refunded to you. You don't need to apply. State Revenue Office will send the money directly to you. And lastly, I think everybody really needs to take a fresh look at their practice. Look at what you did in the past, why you did it, what you may need to do to change in the future to have a robust practice going forward. We've certainly got two good speakers coming up in Padma and Prabin, looking at how you run your practice. Now, in the process, we've been developing a business recovery program, particularly for our clients, so they can successfully restart their dental practice. It starts with a bit of a SWOT analysis, and then a business performance indicator report, which is completed online. And we're hoping that we've got that available in the next few weeks. We're happy to offer this free of charge it's certainly free of charge for all of our clients, but also anyone that is attending this webinar. If you take down the email address alison@mwpartners.com.au and just send through and say, look, I'm interested in the SWOT analysis and the business recovery report, once we've got that available, we'll send out a link to you so you can complete it and get that report. And as I said, we're happy to do that free of charge. So I'm sort of at the stage now that I'm ready to take some questions. I think I'll just take one or two just to try and keep it on track, and then we can go on to our next speaker. I've got a question.
So one of the questions we just got in Facebook is about JobKeeper a little bit.
Yep.
Yeah, they want to know a little bit more.
A bit hard to go a bit more with the JobKeeper.
Bit more. Do you have anything? What else?
I think we might just sort through the questions and go to them a bit later. I'm here for the full presentation, so anything that's sent through will ensure that we get answered. So I'll put that back to Prabin. Thank you.
Thank you so much, Albert. Great, great to have you, mate. That's good. So give a thumbs up to Albert, and if you like this, and if you're watching this through a different, either Zoom or from different platforms, yeah, feel free to share our comments, or if there's any questions you have, burning questions, feel free to post it or comment it right there. So thank you once again, Albert. Look, I can't able to give you the bottle of wine, but I have got a beautiful gift here, sanitizer. I hope you would enjoy, my friend. Here we go. So that's good.